professionalinvestor.com's daily brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the Frivolity. It is Friday, TGIF, TGI Fridays, TGI McFridays, where we celebrate New Year's like 24, what is it, 365 days a year. 3, 2, 1, Happy New Year. What TV show is that from? Let's see if you guys are hip on your TV trivia. Anyway, TGI McFridays. I think that's what the name of the place was called. Anyway. All right, so welcome back to the show. Here's Brian in the saddle, and I see we had probably about 6 or 7 people watching the video, and as soon as they heard Brian was on the call, that dropped down to 2 or 3. I gotta say, Julian's doing a pretty good job. Exciting, action-packed, and lots of good content you guys can use to hopefully make you a better trader. Yeah, Chris got it. That's right. And there's TBG. Oh, we got Glass Insights in the hangout with us, and we got Nicholas here. So I got a few people over there on the free channel over on YouTube, and we've got a few people on the hangout here today. There's Nure over on the YouTube page. Just Ice is over there on the YouTube page. Actually, Just Ice has been doing pretty good in the day trader room recently, being a good Samaritan. I also noticed too we have a few of the OGs coming back onto the site, trickling in. So Ian, if you are watching this, welcome back. And of course, he's trading up a storm there, and actually he's trying to pass the Top Step combines and all that kind of fun stuff. And actually, I had a bit of a revelation overnight, which was kind of cool. I think I'm going to trade the micros over there. I can trade 5 micros as to one big boy. And actually, I even did a trade on the Top Step. Well, I don't know whether it was Top Step. It might have been just, oh, and this darn thing doesn't show you. Okay, well, I can't show you that. I can show you over on TradingView the actual chart. And this was fun because this gives me a hell of a lot more flexibility now. Here's a little name actually that the group on Tuesday, our Stock Pickers Club, stumbled upon. Good looking chart. Nice big fat double bottom breakout here. I guess triple bottom breakout here today. I don't really like it when the pattern looks like that because of course we got this island bottom here that will need filling in. But it is an interesting higher time frame level. So it does look like this was nothing more than just a Wyckoff check. So I don't really mind. I'll keep an eye on this one. If we can get a dip down against these lows over the coming weeks, maybe this forms a nice good looking W. You can see the inside bar that fired here. But anyway, I threw in a stink bid to buy some of this off the bottom end of the range. We'll see how that does. But actually, I'm all over the place here today, like usual. So what am I supposed to be talking to you guys about? I guess first things first, breadth of the market, still pretty negative. It's interesting now, though, you can see the histogram really rolling over here. As soon as we see now the histogram on the weekly start to really roll over and get oversold, then we'll know officially the pivot bottom is in. Getting a bit of a short-term oversold condition. It's interesting how the bonds are just so utterly unhappy because remember, that's what kicked off the correction there. I guess geez, about a year or 2 ago when interest rates finally started rising again. So as long as the bonds are unhappy here, I think it's going to be awfully tough slog for the market. And we have said repeatedly, over the years, don't fight the Fed. And of course, the Fed's back raising interest rates again. Hope you guys enjoyed our fun little show there on Wednesday to sort of talk through the interest rate FOMC meeting and all that. So let's maybe circle around. here was this was actually a little bit of day trading that I was doing first thing this morning. Kind of sloppy trading on my part, kind of a couple crappy trades. Did catch a pretty good trade here, which basically put me scratch on the day. And then I literally, my trading plan is I'm supposed to identify higher time frame levels. So this was where I was a little bit sloppy, not really trading my plan. These were sim trades, so it wasn't really like real money, so I'm not too stressed. And as I said, working with now the platform that Top Step uses here, and I don't know whether they recommend it or what it is, but Quant Tower. I flipped over to the micros, and this is actually a really good example of why I like trading multiple contracts. In this particular case, I had the market hit 2 to 1. So I let part of the position go when I stopped to scratch. And then when we hit 3 to 1, and more importantly, we hit this Foggenbaum level, I was like, you know what, let's just ring the register and take profit. So not a bad example. This was actually a really pretty tag of 78.6. Nice little inside bar reversal in a very strongly trending market state earlier this morning. I guess we're kind of rolling over now. But we had actually maybe not so much. 4 hour actually pointing down there, right? We had the 30-minute pointing up, and we had the 9-minute pointing up, and the lower time frame. So I bought against the low, and we dipped back down against there. Then we rallied up into this horizontal support and resistance level, and I hate to say it, but I think this was the trade of the day. And if anything, it's almost like this is half the reason why you want to just identify those higher time frame levels and really focus in on that, because you can waste a lot of energy screwing around in the market here. And there was the 4 hour time level. You can see the divergences that started to come in up top here. And there was just the most beautiful bearish engulfing bar, and then another bearish engulfing bar. So really, getting short anywhere in here. Of course, there's Brian's favorite fib 78.6. That's the level I wanted to short. And then when I saw all of this, I actually threw in fact, actually, I think I even have it on my diary. If I'm not mistaken, I even think I said this was the trade of the day. Where is it? Maybe in my journal. Yeah. So at 7:20, watching for short entry off of the 4 hour fail level. And I had my order working at my 78.6 level, but I have a feeling that that was actually the trade right there. And I think in my journal, I even said that, well, looks like I was a little bit late on that trade. So boo, hiss, hiss, boo. But, the note here, over the past 2 or 3 weeks, I've been sort of monitoring because I would like to be the demonstrator of best practices for all of you, how I can demonstrate passing the combine. And I just found that because the prices are so high, and it's such volatility, like if you wanted to trade this M top, and there was also, but this was a new high, so that's not really an M. Like I think this was the M, or even this. But if I wanted to say go short here and risk to new highs, you can see that's 57 ticks. So that's how big these M tops are. That's $570 US a contract on the big boy. It's just too much risk, just too much. So anyway, I do. I am probably going to be doing more work on these micros here going forward. Actually, I was pleased to see that Quant Tower, you can actually do micros. So we'll see how that goes. Long and short of it for this combine, September's been kind of a wash for me, just getting used to the platform. If anything, the one good thing that I like about September is you can see I'm really sort of getting back into the groove of how you actually have to trade live accounts. Lots of checklists, lots of process goals, and just getting back into the loop of, better make sure you can get up at 5 o'clock. Actually, I was pleased. One good sign that that you're sort of back in the loop is actually I was awake at like 4:54 or something, and I was awake for the alarm going off. So clearly that shows that I'm again getting good sleep. So that's good. What the heck's going on in the world? When I first start the day, I always like to check in. Eurozone private sector contraction eases slightly, so things are kind of pausing a little bit in Europe. I think we've also heard too that the inflation pressures are kind of calming down a bit. Obviously, stocks took a bit of a punch in the nose there following the Fed the other day and yesterday. And of course, as we've said for a while now, the stock market's breadth itself is just absolutely horrible. So, be careful in the stock market. And, September is historically the worst performing month. So it really shouldn't surprise anyone. And actually, I kind of noticed, and I even put a tweet out about it yesterday, that I think there's some pretty darn pretty sort of really obvious trade setups. This one in particular off of Apple. This was a alt ABCD. And I've been telling you people in the public, and gee, for Pete's sakes, write this down. It's almost a funny joke, right? 9,999 times out of 100, a million, or 100, 10,000 or whatever. If you ever see an alt ABCD 1.618 level hit, you almost are pretty much guaranteed that the damn market's going to reverse off that level. And lo and behold, look at what just happened on Apple. I mean, it's almost ridiculous how cliche this is. So if you're going to add in and just maybe show you what that chart looks like, I think I had, I might have put it away. Here is the running chart, but I think maybe there it is. Oops, let's go. How did I do that? Let's go open a new tab. There we go. And you can see I was wondering how things are palatable. Okay, that's kind of interesting. Where did all this stuff go? Oh well, that's too bad. Anyway, I suppose I can just quickly show you this. So there was the sort of A to B move off of the lows. And I think this painted a pretty good looking inverted head and shoulders, which gave you some upside objectives. Of course, if I was trading the bot, we would go A to B, C to D. So just simplistic purposes, we will put, what would go like there. Of course, it's always backwards. Not quite sure why. There we go. And then this one, which was just a clone. Of course, it'll probably be backwards too. And it is. We will reverse that. And there you go. So the bot setup would want us to, that was kind of weird. What happened there? Hey, there we go. The bot setup would want us, and actually I even showed this on the Wednesday Coinergy show, the difference between sort of range traders and trend continuation traders. So you use the bot to help you trade trend continuations, boom, 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 boom. And I guess what this bot is kind of suggesting is you maybe hunt a long off of that level there. And look to take profits up top here, which I think is, it's not outlandish. But there's that 1.618 level. And, if anything, the bot is a bastardization of harmonics. This is actually harmonics. And harmonicans would call this a PRZ. So what's really cool about this is you can even see if we look at things like volume, you can see how as we're coming up into this level, the volume is just backing away. And of course, if we look at all of our indicators, my hunch is you'll probably see a bunch of divergence here. So MFI, RSI, look at that beautiful RSI div. Oh my God, that's absolute textbook. And of course, you can see the MACD bear div was working away, firing here. So RSI div, MACD div, as I said, the volume, you can see the impetus, the buying pressure, the green bars going less and less and less. Did a really good tutorial on this volume impetus there on that Coinergy show on Wednesday as well. Actually, that's something, Chris, you and I need to figure out. How can we get those Coinergy shows posted on our YouTube channel page? Got to figure out a way to do that. I think we got lots of indicator confirmation at this PRZ. And then we'll check in with the YouTube audience. How can you tell the market is about to take your money from you? If it starts to smile at you. Uh-oh. So this is Mr. Fink. I don't know. And it's kind of weird, Kerry, because Apple used to be all Steve Jobs and all that, and Wozniak and stuff like that. I don't even think Wozniak is even part of Apple anymore. It's funny though, he does have, I saw like YouTube shorts and stuff. He has like Apple appreciated customer card or something like that, and his number is 001. It was like number one. But anyway, pretty good example of a trade setup there. Pretty darn good. I always suggest to people, and that's sort of the same thing as what I just kind of showed you here this morning. It's not a bad idea to force yourself to take some profits. And of course, the knee-jerk level should always be like at least 2 to 1 kind of idea. So if you took to the short there, and the funny thing is there was a full day there where you could have gone, hey, this is an M, I got to get short, I got to sell, could buy a put option. Anyway, 2 to 1. So that would be that move into there. At least take some profits off the table. I always think that's a good idea. And then maybe you move your stop to scratch. And interesting how we came up. Oh, but didn't quite get hit and back down. And you can see, look how, whoops, look how close it came to scratch. But I wouldn't even have a problem if people just wanted to ride this. Now, clearly, if the market does accept back above this level right in here, that short entry level, right off of that level there. If the market does accept back above this level, I think the bear is probably done. And who knows? I mean, it's interesting. You listen to some social media commentators about China. They say it's a train wreck. It's over. It is collapsing. Other people say, oh, it's just a big head fake and blah, blah, blah. But I do think that Apple, especially for growth prospects going forward, they need the Fakazi to continue over there in China. So just the question is, has the bubble popped? And has the Fakazi actually finished? And now we go through the long, slow process of unwinding all of the nonsense. They always say the market can remain illogical far longer than anybody can remain solvent. I think the market is now finally starting to come back to sort of logicalness. And I think your interest rate issue is probably what is driving that. Leaving insanity. I'm not quite sure how you describe it. A couple things, I suppose, from the broader markets perspective that we should probably pay attention to. First and foremost, Dow theory. Transports continue to make lower lows. So it doesn't matter what you see out of the Dow. And if anything, if you do see rallies out of the Dow, that might even actually represent a half decent counter trend rally kind of idea into trade location to set up shorts. So as long as this yellow line transports are heading lower, that you cannot have the industrials rally. And so, again, this sort of reiterates this whole commentary about how the broader market just looks like poop now. And September, October historically are terrible months, so really shouldn't surprise us whatsoever. So that's sort of, this is what's called Dow theory. That's a major warning sign that, hey, there's problems in the market, and really good if you just, we want to learn how to use these kind of tools to your benefit. Notice that the Dow was trying to make higher lows, didn't really make higher highs, but was pushing up, and yet the transports were heading down and making lower lows. And this disconnect actually foretold that, hey, there was trouble on the horizon. You should have been well aware of that. So as long as the transports are continuing to make lower lows, I can't really be too bullish of the stock market. Also, too, things like our inflation deflation gauge, the TIPS versus the TLTs, did cleanly break out through those highs with the energy prices ratcheting higher, which of course is inflationary, cost push, all that kind of talk. And actually, it's kind of funny that I'm back at Top Step because the last time I was at Top Step, oil prices were up around 90, $100 a barrel, and that was through the BP oil spill stuff. So I wonder what the short-term crisis is here that they're blaming the oil rally on. One thing that I did notice that actually should be a harbinger of oil probably coming to an end of its rally is the news headlines here are that Saudi Arabia and Israel are on the brink of, here we are, Netanyahu tells UN that Israel is, quote, at the cusp of a historic agreement with Saudi Arabia. So if you actually find that these parties try to make peace with each other, and the tensions in that whole part of the world finally start to melt away, keep in mind that oil prices hit their bottom in 1999, and I remember Bill Clinton went over there, and I can't remember who the Palestinian guy was. I think it was what the hell was his name? Jesus, there's a name. I can see his face, but anyway. And actually, I think Netanyahu was the prime minister of Israel through them. No, no, no. It was I think it was Sharon or something like that. But anyway, yeah, Arafat. Thank you, Nori. Oh, you're so smart. I remember distinctly they shaking their hands and peace in our time and all that kind of stuff. And oil prices were at their lowest lows. So if we get one of these kind of movements, trends where everybody's friends in the Middle East, you might find that energy prices come off. And then, of course, too, what I find really interesting in this world is, and frankly speaking, if Joe Biden's run out of Washington on a rail and substitute drama teachers, get them the fuck out of power, stupid idiot. Um, we might have the pendulum come violently swinging back the other direction because Mr. Trump, of course, supported the whole fracking industry and the oil shale revolution, and how the United States could actually be a net exporter of oil. And I think that the pendulum's going to come swinging violently back that direction. And all these idiots, me personally, I think that this was all a con job, right? Like Larry Fink was long a bazillion, gazillion Tesla shares along with everybody. And then mysteriously, a couple of years ago, when they're like, okay, we've hit our profit objectives on this stock, all of a sudden, his firm's not going to comment on ESG anymore. They're just not going to touch it. And their comment is, oh, we're just going to leave it up to governments. And now, mysteriously, now the UK is doing a U-turn on its climate policy. And my hunch is that this was all BS, and it was all capitalist driven. It was all, the banksters wanted to fund $100 trillion in lending for the green revolution and all that crap. But I get the feeling that the pendulum is starting to swing back the other direction now. So anyway, only time will tell. But it is interesting, and of course, I'm believe it or not, now I'm actually a commodities bear for the next probably, well, 2017-18 was the cycle peak, the fear cycle peak, and this is what I teach in our education program. Of course, commodity prices themselves absolutely been destroyed here. I mean, the true irony of commodity prices is you think that they're high, and interesting how oil prices are melting back down here on that kind of news that, hey, maybe the Saudis and the Israelis are going to make peace here, right? I got a funny feeling that was a pretty important pivot there. But sort of an aside conversation. If you actually look at like crude oil priced in real dollars, not what the public sees, but actual unadjusted monetary prices, you tell me, are oil prices high now? They're not even remotely close to where they were. This is George Bush and made up wars in Iraq and all that crap. And there's your crazy ass sickness lows. I'm not quite sure what to make out of all that. So, I mean, that's the true irony of the world that we live in here, is that I actually don't think oil prices are very high right now. I don't know. I mean, I'm sure there's probably plenty of technicians out there that are conjecturing that maybe this is carving out some sort of inverted head and shoulders. But the irony of it all, even if this is an inverted head and shoulders, and this has to be some sort of crazy ass measured move, um, they're not going to be taking oil prices to new highs. I mean, it might look like that, at your gas station. You look at the prices and they're through the roof. But you can see all this, if this does actually turn into some sort of inverted head and shoulders, all it's going to do is just take us right back, right? And this is where I was last at Top Step right there. So I was trading crude at $100 a barrel here, and now crude's $100 a barrel here. What the hell's going on? Oh, well, the banksters have diluted the shit out of the currency. No, why do you have $5 loaf of bread at the grocery store? Because the banksters have diluted the currency. Great reset, Klaus. You know how the story goes. Blah blah blah. So anyway, that's a bit of an aside. I think Chris here is telling me we're probably getting close to a half an hour on this broadcast. So I guess what I just wanted to point out was here in the short term, September, October, tough months. Our inflation deflation gauge has gone back to breaking to new highs. So the inflation problem is still very prevalent. And of course, here's the 10-year US Treasury. It's breaking to new highs. And of course, poor old mortgages and mortgage rates, they're breaking to new highs, although this is a bit delayed. But I did think I saw the other day that this number, and I'm not quite sure where they're getting this number here, but I did see, on a monthly basis, they post the US mortgage 30-year fixed rate, and it was like 7.3, I think. So I'm not quite sure where this 7.19 is coming in, but you can see yields on 10-year US Treasury still surging higher. And of course, our inflation deflation gauge is actually, really doing exactly what it's supposed to do. And I tried to tell other people that were thinking about maybe interest rates being done going up that I don't know, it doesn't look like this is finished yet. And, listening to Jerry the other day, they really haven't changed their policy at all. I don't see any change whatsoever coming out of them. Actually, maybe we can move that down a little bit. But would still think that there's one more push higher here. And I'm hearing a lot of people also say that they figure that probably the Fed's going to raise in November. And then they don't really want to be perceived as affecting the election. So you might actually find that that's what causes the pause. And, if Mr. Trump comes charging back into power, you might find that all of the BS names that all went zooming up through this Biden administration, because he doesn't win the second term, all of those names come off. And maybe that might explain a little bit why we're seeing these tech names, because I think the tech names do fairly well under a Democrat administration. Remember the dot-com boom, that was all under the Clinton administration, who was a Democrat. And then, of course, as soon as George Bush Jr. came in, the tech stocks got absolutely destroyed and the energy market came back in earnest, and defense stocks and all that. So it would make sense that we might actually see a correction in earnest if the market does actually believe that Mr. Trump is going to be the next president, although you never know what the hell's going to happen there. You can see this is the S&P 500. You can see not only were we talking about recently, I guess, in videos that I was just working with you guys, maybe on Wednesday and stuff, Tuesday, Wednesday, we can now add that this smile has now come in. So you can see, and I often tell people, like, this is the absolute best setup. So this is like reload zone within reload zone. And this is a smile within a smile, very powerful formation. So probably the September, October malaise kind of idea. Interest rates moving higher, energy price pretty strong, inflation concerns still on the fore. The transports can't get out of their own way. And think, if I'm not mistaken, I think Julian was looking at JetBlue yesterday with you guys as a typical proxy of the transport sector, and it just looks like a train wreck. So, be forewarned. Suppose finish off this free broadcast. If we look at the weekly chart of Bitcoin, we'll of course review this on Sunday and the Broiler Chicken Show. We did rally into moving average resistance there, and once again, you can see how moving averages were a brick wall the first time we went up top, and now this time they did it again, painting these shooting stars. So kind of difficult treading here. If we look at the lower time frame charts, and just remember, this is clearly a trading range market. I think Julian even said he didn't really expect to see a hell of a lot until either we break below this support line or we break up through all these moving averages. Right now, we are in a trading range. And this is now 1, 2, 3, 4, 5, basically 6 weeks we've entered this range. That's about a month and a half. And just understand that, if you're like following the TRI algos and stuff like that, algo traders usually get chopped up in range markets because we just go back and forth, back and forth. So we had a recent buy signal that came in, I think, over here. And we just got another sell signal here. So we're back and forth, back and forth, back and forth. Although I think this signal actually came in a day later. But in essence, this is just what it's really doing is just producing just a ton of scratch trades. I suppose over time we'll show you how that signal played out. Yeah, okay, well, there it is there. So, if we look at momentum, right, you can clearly see, but we've got a lot of damage that's been done here. Anything I would almost, I don't really like to see this. This looks a bit bothersome. Something along those lines, and then something along these lines. Usually when MACD coils like this, you can get some pretty wild breakout and then wash out the other way. So, maybe, I mean, you can kind of see when it happened here, right? So kind of like that. And like that. And then you get just an absolute violent move. We come to an apex and you get woohoo, woohoo, right all over the map. So unfortunately, I do think that that's kind of our fate here is we're building into some sort of violent whipsaw back and forth here. And altcoins, there are a couple names that sure look interesting. This is one that's a carbon credits proxy. How ironic, eh? But gee whiz, that sure looks interesting. And this is a weekly price chart. This is like 20, $25. This is $2. Could we get a little pop up here to $4 or $5 to get that free position? Once you get the sell half on a double risk-free trade, then really you don't care what happens afterward. So those are the kind of names that I am super interested in right now. I wouldn't mind picking up some of this stuff on the books for the coming bull cycle. And I wouldn't be surprised if we get rammed down our throat a whole bunch of this carbon credits crap. I think Klaus has penetrated the cabinets to a great effect. And actually, it's interesting. This is a crypto proxy in the space. And I actually think it was moving up because, I don't know whether it was because of or in conjunction with, but I actually went, look at that pretty chart. Hey, this is another one of these carbon credit names. Really, really good looking. Little double bottom came in here. Boom, 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 boom. This is an Adam and an Eve. And so we went and did some shopping there the other day. And actually, it looks like we're up on the trade now. So that's encouraging. So there are names that are putting in these fun little double bottoms through this kind of market state. But interestingly enough, they're not really in all the names that everybody else is chasing and in the broader indexes and stuff like that, like all these tech stocks and stuff. They just don't look very happy right now. So I don't see any W's coming in here. Although, oh boy, interesting. So actually, this is probably, I'm going to leave off the free broadcast with this one comment here because I think I've told you this before. NVIDIA was clearly a market darling for quite a while here. And the whole AI and stuff. And actually, I was told that one of our site OGs His old man works in the AI industry, and he might come on and have a nice little chat with our community about what he's seeing in the business in the not too distant future. So that'd be fun to keep your eyes peeled, ears peeled for going forward. But usually what I've found happens is that as soon as this kind of name officially breaks, and I don't even know whether I can actually even say that it has broken yet per se. But as soon as these kind of names actually officially break, then the correction's actually over. So it is interesting how we are coming right down into key support here. We've got a couple of horizontal support and resistance lines. Had a huge engulfing bar here that sort of set a base, and I think that's why you're seeing the turn here today. It'll also be interesting too to see, maybe we'll do it in the after party, what the options open interest is, where we should sort of expect institutional players to be moving this market around to defend their option writing. And then also too, maybe throw on a bit of chaos and stuff. So interesting, off of this M top, we could actually see the market come down into these, the top of the gap level. But I guess the point here is that when darlings usually break, that's kind of the end of the move. So what I would be watching for is some sort of capitulation panic dump. Like, do we have a massive amount of bear volume coming in on NVDA kind of idea? And I don't know, you kind of hear like the public is throwing in the towel and all that kind of stuff. Yeah, I guess the way that I would look at it is I actually like the idea that this thing probably could start a bit of a counter trend rally. Now, I am hearing quite a bit of bearishness out of the public, which kind of leads me to believe that maybe the selling's hitting a bit of a crescendo. No real signs, momentum yet. We don't really have any capitulation volume here yet, though. So, but I will be watching this one. It's probably more off of like a lower time frame. Still, volume is very, very quiet. That's a bit suspicious. But you can see here coming into the options expiry today, Willie is officially stupidly oversold. So I don't think shorting or selling a name like this makes any sense here right now. And if anything, if these divs all start coming in here, you can see the MACD div trying to form against these horizontal support and resistance lines. Then we get some sort of W. Keep in mind, trend line resistance on this guy as sort of a market darling is way up there. So could we get a nice little counter trend rally up into that level? That would maybe set up something like a head and shoulders top to hunt. And if you really are a bear, this is the area that you really want to hunt for a trade setup. So I don't like the idea of hunting shorts here on names like this. I think you're way, way, way too late. And if anything, you've heard Brian bark about this a million times. What do you think the odds are that this is like reload zones? This is Brian's favorite fib. We call it the line in the sand on the site. Look at that. So it's so funny how after a while this stuff just writes itself. So if you're looking for a confluence of levels, I would call that confluence of levels right there. Horizontal support and resistance back up against the original market structure top up top here. 78.6, trend line resistance, reload zones, probably even volume profile levels. I kind of like the idea. Actually, that'll be the session. There we go. There's the full profile. Let's throw in some volume profile numbers here while we're at it. Oh yeah, look at that. That would be the top of value. So coming in on the short side on the market here right now, I don't think that makes a lot of sense. And if anything, probably the public is going to be seeing a lot of these images and they're going to be like, oh my God, this looks horrible. Sell, sell, sell. And they're literally going to be selling into lows. That's usually what happens. So, and also too, it's Friday, right? So understand there's lots of funny business going on with the options boys here today as well. Okay, why don't we leave the free broadcast at that? That was about 35 minutes or so, give or take a couple minutes. So Hopefully you got some value out of all that. Slow and steady wins the race. Don't take no with nickels. I would even say I do like the idea that, we're still in a trading range, which means we're probably going to be compressing for a bit, and this compression actually probably comes to an end here. Probably what is that? Friday. Geez, I guess Saturday here. You can see maybe Sunday we actually come to some sort of resolution of this wedge and get ready for some fireworks. But I don't think you're going to see anything here until we get at least through the options expiry here today. And in the after party, let's go look at a whole bunch of that kind of stuff. So maybe it'll validate some levels. Okay, have yourselves a great day. PMA for the win. Slow and steady wins the race. We'll see you all on Sunday for the broiler chicken show. And if you have a chance and you're learning TA and all that kind of fun stuff, be sure to tune into those Wednesday Coinergy shows, because the co-host with me, Joe, there from Coinergy, I think he's actually a really good sort of proxy for the public, and I think he does an excellent job at just being a good student, and he's absorbing all the stuff I'm trying to teach him. So I think all of you could be exactly like Joe, and you can learn something on a weekly basis. So, okay, let's leave it at that. All the best, and bye for now.